Is Target's retail chain following the paths of the many failed retail giants? Seems like yes. The CEO of the retail brand Target admits the chain had an alarming problem, and it looks like the problem is worsening across the country. Of all the retail brands in the country, Target is facing the worst situation, with its profits dropping by millions of dollars. What made Target fail? Well, let's dig a little deeper into this. Over the past 2.5 weeks, the value of Target shares had decreased by nearly a fifth. According to Corporate Executive Retail and Investment Analysis, Target stock saw a 9-day losing streak this week and dropped to a 3-year low as a result of broader shifts in the U.S. economy, the potential for a recession, and Target's overexposure to discretionary goods. A couple of months ago, the retail giant Target announced it would be closing 4 stores in Maryland, Virginia, Minnesota, and Pennsylvania due to the decline in foot traffic. All of the locations are Target stores in a smaller format. The choices to close one of our locations is not one we make hastily, said Kayla Castaneda, a Target representative, to Insider. We only take the measure after working for many years to increase performance, she added. Target is not the only single big box retailer closing stores. Walmart recently announced it was closing a handful of lower performing locations as well. Recently, there has been a lot of negative coverage in right-wing news outlets against Target over its Pride Month clothing. According to Berna Barchet, a seasoned research and finance analyst, it is not closed for LGBTQ customers and allies that blame all of Target's stock declines. It's general retail and consumer jitters. Retail is just very out of favor right now, so all the stocks in the sector are overcorrecting, he added. Regarding its yearly Pride Month clothing line, Target was the target of a bigoted campaign that quickly gained popularity on social media. The anti-LGBTQ campaign circulated false information about the Pride Month items and Target's business practices, with the help of far-right figures like self-described theoretic facets Matt Walsh and on social media platforms. When Target staff was threatened with violence and there was instances of merchandise and store displays being vandalized, the campaign turned ugly. On May 24th, Target announced that it was removing many items from its stores that opponents found to be the most volatile to ensure the safety of its employees. However, the decline in revenue is not due to these hate campaigns. Target's retail strategy, coupled with inflation and recession, has made things take an ugly turn. What are the real strategies that failed Target? Target's profit plummeted to 90% last year, and the reason is pointing out its dependence on discounts to get rid of inventory. Target's strategy to raise prices in 2023 to offset losses is hurting the company even more. Consumers are not interested in buying 60% of the company's inventory, and the remaining 40% is significantly more expensive this year, causing customers to choose other stores for their everyday purchases. Target sales continue to disappoint, and investors and major financial institutions do not believe things will improve for the retail giant anytime soon. In its report, J.P. Morgan noted that we continue to believe that the consumer is broadly weakening while the share of wallet shifts away from goods is ongoing. J.P. Morgan had downgraded Target in the recent past, and it's been over 23 years since the last time Target had such a continuous losing streak, not even in the early 2000s when financial markets were being hammered. The retail giant lost its money in all last quarters, dropping profit by 49% in quarter 1 by 52% in quarter 4. Sales at its stores and on its website slumped even though the company offered deep discounts to eliminate unwanted inventory. Rising prices and inflation have put a strain on consumers, especially middle-class households who make up the bulk of Target's customer base. As a result, they have altered their shopping habits. Target sells more than half of its inventory as non-essentials such as clothing, home decor, gadgets, toys, and party supplies. Consumer spending has migrated away from luxuries and towards necessities like food, household items, travel, and other services. These developments are harming the Target. Last quarter, Target's revenues increased by just 0.5%. Target reported that while food and beverage sales climbed by high single digits, sales of clothes, home goods, and other discretionary categories decreased by up to low double digits. A CNBC survey finds nearly all Americans cut back on spending due to inflation. This year, conditions have been becoming worse for Target as customers cut back on discretionary spending. The problem lies with the general merchandise in categories like apparel, accessories, and home goods, which accounts for 60% of Target's inventory, and it's the strength of all retail shops. With customers spending less on these goods, Target had lost 60% of its sales potential. Experts in the retail industry, including former Walmart CEO Bill Simon, say that retailers like Target are in big trouble as the recessionary trends are likely to be sticky in the discretionary category. These stores will have to differentiate themselves and have an offering of product or services that is in demand. Those without as much food will struggle to keep up, Simon said, referring to retail chains like Target, which typically sell more non-essential items than staples. A few months back, Target EVP and Chief Growth Officer Christina Hannington noted that the cost of housing, energy, and food are absorbing more of American spending than ever before, and unlucky to say that a company's inventory did not sit in a good position when the economic crisis in the country began. When consumers spend a large amount of their budget on grocery shopping, other products like apparel, home goods, sports goods, and electronics, which represent nearly 60% of Target's merchandise, were all down between 7% and 9% compared to last year. Okay, this is the case with non-essential commodities, but what about grocery items? The company didn't see a significant increase in its grocery sales in 2023 either. In fact, after rising by a mere 1.7% and 0.8% in January and February, respectively, grocery sales declined by 0.7% in March and 0.9% in April, generating a dismal 0.9% in food sales for the entire quarter. Where did the retail giant go wrong? The company may have made a terrible mistake in its pricing strategy by increasing the price of grocery products, the only category where it remained relevant due to the current shift in consumer spending. In a year, Target's grocery pricing increased by 21%. In comparison, Walmart also raised its price of food products by 27%. However, that increase happened in about 2.5 years. Above all, Walmart's prices were lower than Target's prices in the first place, so its competitor had the room to do so. Target may have pushed its customer far too much. Before that, the company passed along its operational costs to the consumer in 2021 and 2022. On a Reddit thread where shoppers discussed price hikes at Target stores, one of them said that the prices at Target shops have become insane. The person also added that inflation may be the reason, but there are many other issues amid price increases. It turned ugly when the person couldn't afford basic purchases more than a year ago. The products in Target are not as affordable as their competitors. Costco also and Walmart can offer more valuable and better deals for customers. Another problem that shoppers face at Target stores is the empty shelves. Plus, the quality of fruits and vegetables is questionable, and some products disappear from stores and never come back. It should be pointed out that the decision to increase the food prices come at the worst possible time, as other retailers are doing their best to keep inflation tamed to attract more consumers and boost their profit margins. Target should focus on its current customer base and shouldn't aim higher in this crisis period. The industry giant is now trying to attract more household earners over $150,000 a year. Today, Target's shares of upper-middle-class customers is 19.6% compared to 14.8% in 2019. These categories of consumers are not numerous enough to fix Target's financial problems. Target is a mass retailer and should be affordable to consumers of all incomes. At times, Target forgets this, and the most glaring example is the chain's ill-timed holiday partner shop with luxury department chain Neiman Marcus. Guess what happened? The plan flopped just because the Target ran the merchandise too high. It is high time that the retail giant should curtail its pricing strategies to the needs of the present time. What do you think about Target's retail pricing? Comment below, and thanks for watching. For more videos like this, subscribe to our channel.